Inflation has held steady. CPI has come in at 2.8% year-on-year in May, unchanged from the previous month. This is largely expected by analysts. Inflation has been below the midpoint of the Reserve Bank's target range since August last year, and so has allowed the SARB to cut interest rates at 4 of its last 5 policy meetings. Last month, the main lending rate was lowered by 25 basis points. The SARB also reduced its inflation and economic growth forecast for this year and next, and stressed its preference for a lower inflation target. Retail sales rose sharply in April, jumping 5.1% year-on-year. That's from a downwardly revised 1.2% increase in March. The latest reading marks the strongest growth since January. The upswing was driven primarily by higher sales at general dealers and clothing and footwear outlets. This comes as consumers have been given some breathing room thanks to a lower inflationary environment and monetary policy easing. Brait is back in the black. The investment holding company has posted annual headline earnings per share of 5 cents. That's from a loss of 13 cents previously. The firm's turnaround has been underpinned by strong operational performances from its key portfolio companies, Virgin Active and Premier. A 1.3 billion rand reduction in debt also helped. That followed a series of recapitalization measures that included a 1.5 billion rand rights offer and bond buybacks. Anglo American's restructured its leadership. The miner says it's consolidating its production businesses under a chief operating officer, and that Ruben Fernandez will assume that role from next month. The restructure will also see Themba Mkhwanazi, currently regional director for Africa and Australia, step down at the end of June. He oversaw the demerger of Valterra Platinum. Anglo says the decision reflects progress made in terms of portfolio simplification, with the demerger completed and sales agreed for its steel-making coal and nickel units. The Competition Tribunal has heard from the Competition Commission and Barloworld on why its management-led buyout will not harm South Africa's cartel rules. The takeover has already been given the green light by the Commission, and Labour has also given it the nod, as the deal is unlikely to result in job losses or changes to working conditions. The multi-billion rand deal, spearheaded by Barloworld CEO Dominic Sewela, is expected to be closed this year if all goes according to plan.